Hello, good evening and welcome. This is BizFirst Review 360, your weekly roundup of the top business stories and developments impacting Sri Lanka's economy. Let's get straight into our top story tonight. The central bank announced its second monetary policy review for 2017 this morning. I sat down with Shiran Fernando, the lead economist at Frontier Research, to get some perspective on the review. So the Monetary Board of the Central Bank has decided to hike the policy interest rates, the reverse repurchase rate and the repurchase rate, by 25 basis points or 0.25%. What will the implications of this policy decision be on credit growth, on inflation, on the rupee? Will it alleviate the pressure on the rupee? To talk about all this and more, I'm sitting down with Shiran Fernando. He's the lead economist at Frontier Research. Shiran, thank you very much. I know it's a very busy day for you today, so thank you for taking the time off to talk to us. Let me ask you straight away, this was expected, wasn't it?
It was largely expected because I think it started off in the last monetary statement where the central bank basically left the door open for a rate hike in its next one or the one following this, today's one as well. What was also further what sort of made this even more inevitable was the IMF sort of recommending further monetary tightening, which is basically to raise the interest rates, as you mentioned. And with that, we saw the market reacting as well. So if you looked at local government treasury yields, they have been rising since that point where this regulation sort of started. So it's largely priced in, and something that was to be expected, in particular with inflation going up. But I think the interesting thing...
Sorry, you're going to say the interesting thing. I'm just going to interrupt there because there's another interesting thing. So private sector credit growth.
Yes.
Private sector credit growth actually slowed in January. So do you think that this would have caused the central bank not to go for a hike? Do you see a logic in their move?
Where credit growth fell to about 18 billion in absolute terms, it's still quite high if you look at the yearly growth, still around 20% levels. I think the central bank ideally wants it to come under that and maybe towards 15 billion. Having said that, it's a decline from, I think it's averaged about 60 to 70 billion in the second half of 2016. So it's a sharp fall. Maybe the central bank is taking a view that maybe this was a one-off fall and maybe based on probably they have the data for February and March as well, and are of the view maybe it'll take a bit more time or another hike to sort of bring these rates down. And largely I think it's mainly precautionary. I think that's the main thing that came out of the statement. They probably want to take a forward-looking view, in particular with the pressure that you're seeing, in particular in the open market operations, which is a step below, for example, the fixed deposit rates, and you get the bond yields, and then you get the open market operations.
On the topic of bonds, the governor of the central bank mentioned that this step was being taken to keep in step with the United States and also to discourage foreign bond holders from selling off sovereign bonds of Sri Lanka. Do you think that this move will be successful in that respect?
Well, the US Federal Reserve increased its policy rates in a week back, I think. So that move, you could say, was to compensate for that, so that differential will now sort of remain the same. But I think it doesn't make too much of a thing in the grand scheme of things. Maybe a signal that, you know, we're still going to offer you 12-13% rates, so please come back and invest. Because what you've seen since October is capital outflow of about $800 million leaving the market, and foreign holdings are at a low. But I feel that's more to do with these funds, redemption issues in their own countries, and more to do with emerging frontier markets than Sri Lanka specific and our rates. So I'm not sure whether that will sort of serve that purpose.
Now, it was reported today that the rupee, in spite of the central bank's decision, the rupee was trading lower. Do you expect this to change?
I don't think there'll be an immediate impact. I think it'll take a while for these things to adjust. But the hiking should sort of shore up the rupee as well, because now it signals to the market that the central bank is not only just keen to let the rupee adjust, but also have taken steps to adjust the rates as well. So it's sort of shoring up the rupee in that sense. So I think maybe the weakness will sort of abate. Maybe today there was a bit of import demand, those kind of pressures that you see on a daily basis. But over the long term, there will be spells of pressure, and whether the central bank defends or not will sort of determine where the rupee moves. But in other times, I think overall we're not expecting too much of a depreciation from current levels.
Now, one of the concerns that the IMF raised was actually to do with inflation, trying to arrest or stem inflation, the inflation rate. Did this decision, obviously had a link to the concerns raised by the IMF,
Yeah.
is it enough? Is it enough of a step to curb inflation?
I think if you look, if you forget the drought and what's going on domestically, even when you were heading into this first quarter, inflation was going to rise, and that was because of base effects. Inflation was very low in the first quarter in 2016, almost 1-2%. So inevitably, it was going to be higher. What sort of moved that even more higher was the drought effect and the food supply issues, and also the tax impacts. So all these three factors together, which are more supply side, has seen inflation going up. So monetary policy is supposed to curb the demand side of things, which has also risen. But maybe inflation did not warrant such an increase too soon. Possibly, maybe the central bank is taking a view that with the demand side sort of improving even more, or it increasing, inflation could go up further and it could be uncontrollable. So back to the whole precautionary, forward-thinking move that maybe the central bank is sort of taking.
So I want to talk about something that will be of interest to our viewers, which is how will this policy rate hike affect the construction industry? We're seeing a boom in the construction industry. I want to know how this will affect people who are first home buyers, people like young families that are looking at buying their first home, people are looking at buying their first car, etc. How will this policy rate hike affect them?
So what you've seen, just to take a step back from this hike, what you've seen over the last 2 years is credit driven a lot by construction, either government projects or housing and first home purchases, as you mentioned, and apartments and things like that. So a key reason for that has been the low interest rate environment that you saw in 2014 and 2015. But over the last 12 to 15 months, you've seen an increase in rates, which I'm sure will now make people think twice whether, should I go for this investment, because it's going to be 13, 15, 14% depending on terms you get. So I think there will be an impact. It'll be interesting to see whether it'll be right now or it'll be a lagged impact, because if someone took a loan a few months back, they're probably willing to continue it and take that loss or hit for a while. But for new loans, it'll probably have an impact. That
impact depends a lot on whether the commercial banks will follow suit with this policy rate hike. There have been instances in the past where the commercial banks have not followed suit. Maybe if you look back about 5 years ago, when interest rates were being lowered and the commercial banks didn't follow suit. Do you think that this time around the commercial banks will go ahead, raise their rates as well?
I think as it is, if you look at some of the lending rates as well as the overall prime lending rate, it's quite high. So it's difficult to see it going too much above, because you have the banks and you have the finance companies, the leasing companies, and rates are quite steep as it is. If they do it even further, then demand will totally collapse and you will have a lack of credit growth. So probably maybe they will look to monitor it right now and take a step in the next few months rather than an immediate knee-jerk reaction right now.
Sharon, finally, I want to ask you, yesterday the Colombo Stock Exchange, the ASPI, closed at a 53-week low, and many pundits were saying that this is because they were expecting some action from the central bank in the monetary policy review meeting. This morning in early trading, it was about 0.3% high, almost as of this afternoon. It was 0.3% up. What does this tell you about how the market, the stock exchange, is reacting to the central bank's monetary policy review?
So just as I think the bond market was sort of pricing a potential hike, the equities have also been sort of projecting this hike. maybe they were expecting a 50 basis points, which didn't materialize, and you got a 25 basis points. So rates didn't increase as much as it would, because if it did increase higher, then equities become slightly less attractive. But now that it's passed, maybe there's a bit of optimism and things like that falling in. It's difficult to provide, a view just based on today's daily thing, but I think that's primarily a reaction to just it being 25 basis points, I think.
So this is the second policy review for this year. A few more to come. Do you see the central bank sticking to this trend of tightening monetary policy, or do you see maybe they'll maintain this rate for at least until the year is through?
Unless something dramatic doesn't happen globally and conditions become really tough for us to raise debt locally as well as overseas, I don't think there will be a further change in maybe the next few meetings. They'll probably look to see where the variables are at and make precautionary things. Because the other side of things is you can't raise rates too much, and that will have an adverse impact on growth and investment. So they'll be careful on that, especially given the drought impacts that are already having an impact on agriculture and GDP as well. So I think they'll be now giving all variables an open look before making the next step.
Sharan, thank you very much for talking to Newsfirst Review 360 as always.
Pleasure.
It's been a pleasure. Thank you. Coming up after the break, sealing a deal on the Hambantota port. Welcome back to the program. Have Sri Lanka and China ironed out their differences on the deal to run the Hambantota port? Here's a look at the latest developments and the impact on the industry as a whole.
Earlier in the week, the government said it is close to inking a revised deal with China Merchant Port Holdings to sell 80% of the stake in the Hambantota port and a 1,200-acre industrial zone, following protests and allegations of corruption from mainly the opposition. Sri Lanka borrowed $1.4 billion from China to build port infrastructure such as a breakwater, a tank farm and a bulk cargo jetty and artificial island berthing spaces. China Merchants Port is expected to pump in $1.12 billion for an 80% stake in the port and a hinterland industrial zone. Objections by Ports and Shipping Minister Arjuna Ranatunga over the lease of 1,235 acres of land for 99 years and a demand to increase the state-run Sri Lankan Ports Authority stake to 60% has delayed plans and created uncertainty in the shipping industry.
Contrary to the information in the public domain, Sri Lanka Ports Authority and all the government institutions in Sri Lanka called for requests for proposals to develop Hambantota port 3 times in the past and failed to generate worthwhile interest. On the first occasion when RFPs were called in 2010, there were 27 proposals. And in 2012, there were 10 proposals. While in 2016, there were 10 proposals, out of which 4 were for bunkering. I think Mr. Vegapati also bidded for bunkering. You did. So, strangely, the 2016 proposals have not been opened yet. They are kept sealed for whatever reason, I do not know. On all these occasions, there were only some who mentioned about cement factories, sugar refining, which didn't see the light of the day. The obvious reasons for lack of interest is due to the lack of infrastructure, high cost of utilities, lack of hinterland, non-availability of support services, among many other reasons.
Against a backdrop where the IMF in its previous report advised the central bank to keep an eye on the inflation rate, the latest data is indicating that prices are rising across the country. Tonight on Vital Statistics, we're keeping tabs on the inflation rate.
Data from the Statistics Office showed island-wide price rises measured by the National Consumer Price Index rose 8.2% in the 12 months to February 2017, accelerating from 6.5% in January. According to data, food prices rose 10.2% in the 12 months and non-foods rose 6.8%. The central bank today decided to raise policy rates 25 basis points to 8.75% as inflation rose to 6.8% in Colombo in February and nationwide inflation rose 8.2%. The central bank said it decided to raise policy rates as a precautionary measure in order to contain the build-up of adverse inflation expectations and the possible acceleration of demand-side inflationary pressures through excessive monetary and credit expansion. The central bank said the recent acceleration in inflation is largely due to the impact of prevailing drought conditions and adjustments to the tax structure, and it is projected that inflation would revert to the desired mid-single-digit levels in the period ahead and stabilize thereafter, unless disrupted by adverse inflation expectations.
Let's now take a look at some other stories that made headlines this week.
The Chinese-owned maker of London's black cabs opened a new factory in central England on Wednesday to produce electric taxis, which it also hopes to sell overseas for the first time to cities keen on the famous brand and concerned about pollution. The London taxi company plant near the city of Coventry is Britain's first electric vehicle factory and will help the firm to expand overseas as part of a £300 million investment.
Well, I think the fact that an important Chinese company is making such an investment in Britain to export around the world, knowing that we are making Britain the go-to place for research and development of new technologies in automotive is one of our strengths. We want to maintain and indeed extend and deepen our trading relationships across the whole of the European Union, but also from Europe to the rest of the world. And I think this is a good example of that strategic approach that we're taking.
The move is the latest stage in the turnaround of a company which was saved from bankruptcy just over 4 years ago by China's Geely, and is also a welcome boost for Britain as it prepares to start divorce proceedings from the European Union. The first electric taxi to be built in the factory will go on sale in Britain in late 2017, with sales in Europe due at the start of next year.
One has to be honest, this wouldn't be here today without that backing. But you have to look at what that's created. I mean, we are still quintessentially a British company. This is designed by Brits, it's engineered by Brits, and it's built by highly skilled Brits in this factory in Britain. But without that contribution, it couldn't have been there. But it's also the wider contribution of the family. The technological support that we've had from Volvo Cars has also been very key. We now have to build our business and return that trust.
The European Union's chief negotiator for Britain's exit from the bloc, Michel Barnier, spelled out on Wednesday the EU's conditions and priorities for the talks, stressing the need for early agreements on citizens' rights, money and borders. Speaking to the Committee of the Regions in the European Parliament, Barnier said the key to reaching a deal within the 2 years envisaged by EU law was to negotiate issues in the right order. He said a scenario of the deadline of March 2019 passing with no deal was not one the EU was entertaining. Barnier said in a prepared speech that one of the first conditions for success was to remove the uncertainty about the future of Britons in the EU and EU citizens in Britain, which amounts to some 4.5 million in total. He noted this meant tackling residency rights, access to labour markets, pension or social security rights and access to education. The talks should also quickly remove any doubts about funding for programs financed by the EU budget, he said. Barnier said all of these programs were approved together with Britain, financed together and provided benefits to all. Therefore, London must settle its part of the accounts. He expressed the wish that negotiations quickly dispel any uncertainty regarding the EU's external borders after Britain leaves the bloc, in particular the Irish-British land border. Barnier said the EU shared the ambition of Britain's Prime Minister Theresa May to reach a bold and ambitious free trade agreement to replace current ties, but noted its terms would be less favourable than those governing Britain trade with the EU now.
On the other side of this commercial break, a chat with UNICEF's regional head for South Asia. Children and young adults will eventually become the driving force of economies in the South Asian region. And it's important that businesses invest in education, health and nutrition. I sat down with UNICEF's Regional Director for South Asia to discuss the role the Sri Lankan private sector can play in nurturing its future labour force and customer base. I'm sitting down this evening with the Regional Director for UNICEF in South Asia, Ms. Jean Goff. Ms. Goff, thank you very much for speaking to BizFirst Review 360. I'll get straight into it, the program. From cognitive capital to business capital, why investing in children makes better business sense. Why did UNICEF come up with this program, and what are you hoping to achieve from this?
Well, I think we are expanding our partnerships. So we are working with business community to make sure that we understand each other. You know, when the new science has shown us that the brain development happens very early in life, and you need to invest early to reap the benefits of those brains that we have. In Sri Lanka, we have 6 million people that are in different children that are in different stage of development of their brains. And the early years are the most important of those brains. This is the time when the social, emotional is being developed, and this is where the child forms his ability to work collectively, his flexibility, the critical thinking, the creativity. And so those early years that the foundations of the later learning are very important for everyone, including the business. And we want to make sure that the business is prepared, that the new generations, and we invest correctly to really reap those benefits.
When you say invest correctly, Jean, what are the sectors that you're hoping the private sector, the business community, will get into when it comes to child development?
We would like that the private sector partners with government, because it needs to be a systems approach to make sure that we do more early childhood development in the early years of a child. That means invest in nutrition, invest in early stimulation, invest in good health, that the good health of Sri Lanka children is already there. So we have the foundations to build on. Build the stimulation part, make sure that the food and the nutrients are enough there. Work with the families and the mothers, that the child has opportunity to play, to make sure that the child has the ability to work with other children, to form those social skills that are so required, and be able to think. So those brains, when you're developing, needs that attention that the early part of stimulation is required for them.
Jean, how difficult is it to convince business? I mean, in today's world, you look, a lot of it is run on profit motive. Businesses run on the profit motive. If it's profitable, we'll invest in it. Show me what my returns are going to be. So how do you tell the business community, look, this is what you're going to get back. These are your returns. This is the return on your investment in nutrition or child health.
You know, studies has also showed, because we're also been preparing to look in what those investments are. If you invest $1 in those early years, you get $17. So the returns for those investments are great. And business needs the human capital, needs the skills that the system will produce. So if they don't have people with the skills that they need for their business, they don't have profits. So how do we make sure that collectively we work together in that continuum of development to make sure that those early years we capitalize, your child continues to develop, and he transitions from this early learning, he is prepared to go to primary education and has the readiness to be able to be a good learner in the primary education system. He stays in school and he learns. Then he transitions to the next level. And then also science has shown that the second decade, the adolescent, the next part of your brain is developed. And so those other skills that you need to continue in development for your productivity in the later years. So I think it doesn't take much to convince people when you need the human capital. And what we've been hearing is that the skills, given that the learning that's happening in the education system in this country is not at the level what the business need. So they're already seeing that they could be more productive if they had a better outcomes of the education system. So those education system needs to be prepared for the skills that the business need. And I think that partnership between government, institutions like us, is a good start to make sure that we understand each other, that we are able to project what the skills the business will be needing, and so the education system responds to the needs of the business.
There's a lot of talk about sustainability in the world today. We have the Sustainable Development Goals to be achieved. How does this program, organized by UNICEF, tie in with the sustainability agenda and achieving the SDGs?
Well, one of the biggest, one of the goals is bringing business together and business contribution, because we all realize that governments alone cannot do the job. Civil society alone cannot do the job, international communities. So that's one element. The other element, all the goals, is about thinking of the knowledge generation for the next generation of the next decade. And I think when you invest in the early years, you invest in the correct skills in education, in transforming that learning to real skills. And I think that's where we need to work more here in Sri Lanka, to make sure that the children that come to school really learn. And we are seeing that the learning achievements are not to the level that is required. And that's also part of the Sustainable Development Goals. Water and sanitation is part of the Sustainable Development Goals. So I think this is only adding on another dimension to what's the goals that we are also, in bringing it more attractive, that we have one word to say invest in many things to reap those benefits of development. And development is a continuum. And I think investing in those 6,000 brains that Sri Lanka has now, I think is your future. And we really need to look at that from that angle. So thank you so much.
Jean, thank you very much
Nadeem,
for
thank
coming
you
on
so
Newsfirst
much.
Review 360. It's been enlightening. I wish you all the best.
Thank you so much.
And that's a wrap of tonight's show. Don't forget to look us up on Facebook. You'll find us at Newsfirst Review 360. That's 1ST and 360 in numerals. I'm Nadeem Majid. I'll see you again, same time, same place next week. Good night and good luck.